In today's video, I'm going to show you what your accountant should show you, but tend to wait till the end of the 12 months is up, and by that time it's too late. Your financial records, your profit and loss, this is what you need to know on a monthly basis, or even weekly for that matter. In this video, I'll take you through in depth what a profit and loss is, how to read it, and what tools you can use within it to make sure you maximize your profits. So let's get started. So let's look at the profit and loss, and I'll go over firstly about the profit and loss, and then we'll specifically draw down into more of the gross profit. And I'll explain to you about gross profit and how you can benefit from understanding it and the concept of it. So with a profit and loss, pretty much it's your financial performance of your company. This is different to your cash flow, money in and money out. So this is more about your income versus your expenses. So it's broken down to two parts. The top part up here is your income, and I've just used two examples. One is a cleaning company, and one to the right here is a vacuum cleaner sales company. So one's more of a service on the left, and one's more of a product on the right. And if we follow it down after the income, we'll find that the cost to produce that income is up the top here as well. So that's cost of sales. So in the case of a cleaning company, the cost of sales includes the cleaner's wages and also any consumables, meaning like chemicals and that for cleaning. On the right hand side where we've got the product, so the cost of the sales is things like if you're selling vacuum cleaners, the cost is how much does it cost you to buy a vacuum cleaner in? And in this case, I've got 100,000 income, 60,000 cost of the vacuum cleaners out of that 100,000, freight to get them on site, and staff wages to sell those vacuum cleaners and pack them away, etc. So there's two similar examples, but one's a service and one's a product. And so this part up the top here is what we call the gross profit. The second part of profit and loss is what we call has to deal with the net profit. So it's how much you make overall. So it's split into two, the gross profit and there's net profit. But the net profit is your actual position overall. So in some cases we have gross profit pretty much only, and that's usually like a one-man band where they might buy in the vacuum cleaners, go out and sell them, or they buy them in, sell them online, they go straight back out. So effectively there's very little costs other than the product itself and the wages directly. When you have a bigger company, you generally have advertising costs. You'll have things like office leasing or building leasing, where sometimes those can be if it's a one-man band, you can do that from home. So there's no actual extra costs involved. So the second part of it, which is the operating costs, so this area here, and that's generally related to if you do have a building, but not entirely on that. So you'll see things like rent, sponsorship, it could be things like training, telephone and internet, those sort of costs that are associated with a bigger company in that. But we'll specifically on this talk be more focused on the gross profit and two examples of that. So going back to what is gross profit? Gross profit is looking at the difference between the cost of the product or service versus the sales. So you have the total income, deduct off the cost to get that income, and then that is your gross profit, the difference. In this scenario, as mentioned before, I have two situations where I have two examples. One is the product and 2 is the service. So let's compare the two. So in example 1 where we've got the service, so this is cleaners, and we've got 50,000 income up here. We've also got contract cleaning 10,000 and then residential cleaning 40,000, which gives us a total of 100,000. If we flick across to a product on the right hand side, so this is vacuum cleaners we're selling this time, not a service, we have 100,000 income from selling the vacuum cleaners, and so they both equal 100,000, two examples that I'm using. But the key difference between the service and the product is on the left hand side, the service, so the cleaning service that we have, you'll find that the wages will be higher because effectively, instead of buying vacuum cleaners in this case, we are offering a service, but the service or the product in this case is the staff itself. Hence why the wages is a lot higher on the left example, on the service, as it is if we flick across to here where it's a product. Because the cleaners in this case are going out and we're charging the hours out. So effectively they're the product. Okay, so the wages should always, or normally is always higher if it's a service based, because the service is your product. But other things will be lower. So you're not actually buying a vacuum cleaner or buying a product. So hence you'll see there's no big expense to buy that in. Always remember when you have a product or even a service for that matter that any costs associated with you either providing that service or providing the product is accounted for up the top here. So in this case with vacuum cleaners, we've got 60,000. That's how much it costs us to buy in if we want to sell $100,000 worth of sales in this example. But we also have to add in the freight to get those vacuum cleaners on site. So that might be a couple of pallets transported with all these vacuum cleaners. So we've got the freight, 100,000, and the staff wages could be a combination of the people in the warehouse who unpack these vacuum cleaners and the staff that go out and sell them. Or it could be an online business, so it's the wages to package them up in that as well. So in freight and packaging, there could be, where it's got 0 there could be a percentage there, so it might be 1,000 in this case. But for the purpose of this exercise, I'll take that back out again. So this is a common error, what happens with products or even services for that matter. When we get an income, we see we've got 100,000 income there, and that money might go into the bank, and we think we've made $100,000 profit, or we can spend that $100,000, where this gives you a true indication of what you really make out of the vacuum cleaner. Because if we break that down to a product, and say the vacuum cleaner is $300 excluding tax, because on a profit and loss it takes the tax off, and in this case here in Australia it's GST, so we have a vacuum cleaner of $300 excluding tax, but an actual $330 might be the amount that we're selling it for, because it's 10% GST here. So that's the true retail price is $330, but when it transpires to the profit and loss, it shows less that GST, which is $300 in this case. So we've got the net price of $300, so the tax is taken off that. So that's the sale price. So each individual vacuum cleaner we're selling for $300. So if we bought in $100,000 worth of vacuum cleaners, we sold them at $300 each, and the cost of those vacuum cleaners to buy them in was $60,000, and we have the freight on those and the wages. So if we flick across to this column again, we're selling a vacuum cleaner for $300 plus tax. The cost of the vacuum cleaner, so it's 60% of the total, so that's $180 in this case. Then we have the proportion of freight is $3, and then staff wages is 28%, so 28% of $300 is $84. So that's where these are. These figures here are percentage of the total cost of that vacuum cleaner to buy it in and then get it back out to the customer. So in this case, the total value of the $100,000 sales of vacuum cleaners, 60,000 was attributed to the vacuum cleaner itself, 1,000 to freight, 28,000 to wages, which is 89,000. So 89,000 is the cost of 100,000 of sales. So in the go to the individual vacuum cleaner, $300 was the sales of a vacuum cleaner. That's what we sold it for. Less all the costs, and the total cost is $267 in this case. So then we're left with a gross profit of 11,000 for the 100,000, or 11%, and 11% for the individual vacuum cleaner is $33. So the gross amount we're making on a vacuum cleaner is only $33 in this example from the $300 vacuum cleaner. So when somebody says, "Oh, I sold a $900 worth of vacuum cleaners today," in reality, we're only making $99 profit, gross profit. So that's where a lot of people get tripped up and thinking that they've made $900 or even $600 out of the 900. But when you look at the true cost, often it's a lot less than you expect it to be. So there's two ways we can look at increasing our gross profit, because if we don't get this correct, because once we start looking at our other expenses as we expand, if we don't get our profit on our product correct, then we won't have enough left over to pay any other costs, and then we can go into negative, into a deficit each week or month. So let's say, okay, if the vacuum cleaner was $400, let's go $400 in this case. So we sold it for $400. Okay, so we're selling that for $400 is the sale price, and now the take off the cost of the vacuum cleaner, and it leaves now a $44 profit. So you'll see that 100,000 divided by $300. I probably didn't use the exact perfect ratio here because it works out about 333 vacuum cleaners to get the 100,000. What's 333.33? So I'm not sure where the 0.33 of a vacuum cleaner comes in, but you can get the idea of that. So if we increased our prices to $400 and we still sold the 333,000 vacuum cleaners, so this would make this figure $133,200. So that would be 333 vacuum cleaners approximately at $400 is $133,200. So you're not only seeing that your income is increasing so you increase your sale price to 400, which would then, if you times that by 333 units, then it's 133,200. So you're making more income. But if the vacuum cleaner is the same cost to you and the wages are the same cost, then you can see that your costs still remain at 89,000, but the difference between your income and your costs is now 44,200, which is a 33% gross profit return. And you'll find here, because if we break it down to individual item, because your vacuum cleaner still costs, with all associated costs, $267.27 per unit, instead of $33 gross profit, which is the difference between this 400, which used to be 300, and the 267 is 132,000 gross profit. Sorry, $132.73 gross profit. So the $132.73 is what you make for every $400 vacuum cleaner you sell. So you can see how it quickly changes. This used to be 11% gross profit, now it's 33. So that's more heading in the better direction of your total gross profit and profitability overall. So instead of making 11,000 like we were going to on 100,000, we now, by increasing our vacuum cleaner to $400, we're now making gross 44,200. So if you get this right, this part right, then the rest will take care of itself. Obviously, you've got to sell a certain amount of vacuum cleaners to cover all your costs, because if you sell one vacuum cleaner and a week and you have staff wages that is $1,000 a week you're paying them, and the vacuum cleaner sale is $400 less the costs, and it remains one vacuum cleaner, you'd only make $132, where your wages for that person to be on site all the time might be $1,000. So obviously you're not going to make money that way. So it still is a volume based as well, but that just shows how getting your gross profit, and it's usually around about the 50% mark for the gross profit, is good to work on. So if your gross profit is 50% of your income, then you're on the right track for making a profit, a net profit. So finally, how do we increase our gross profit? There's, like I showed in this example, one is you increase your sales costs, or in this other case where we've got an example of a service. So in the example of a service, we can increase the charge rate that we charge for cleaners. So that will increase our 100,000 income if we either increase the amount we charge per cleaner. Now, sure, we can increase the charge per cleaner, so that would make, if we increase that to align with the 133,200, that's all good. But if we actually increase the amount of hours the cleaners did, then you'd also notice that the wages for the cleaners will increase. But if we increase their actually charge out rate only, then the wages per hour wouldn't increase. So you just got to be careful of that. You can say, okay, we're going to bring in more income to match that 133 equivalent in vacuum cleaner sales. And we're going to do that by increasing the amount of hours we are charging out, where that would potentially increase your gross profit, but not by as great a percentage as if we charged out the cleaners at a higher rate. And I'll show you in this example now. So you can see we have increased the cleaning charge out rate. So I've got up here extra cleaner charge rate. So that's the difference. We've increased their charge out rate, 33,200, just to use this as an example in this scenario. And so that brings it to the 33% gross profit. And see, you can, the wages remain the same there, 88,000. It's the same gross profit, 44,200. So in this example, instead of actually increasing the charge out rate for the cleaners, I've increased the hours the cleaners do. And this is I've just used the same amount, the 33,200. It's like, say we said to the cleaners, okay, if you do an extra so many hours each a week, then we can generate another 33,200. But by doing it that way, as opposed to increasing the hourly rate, you'll find that the cleaners' wages to income was 88% of it. So I increased 88% of the 133,200. So the wages for the cleaners is now 117,000. So sure, we're getting more hours out of the cleaner, income hours and income of 33,200, but you'll find that the gross profit is still sits around that 11%, so it's only increased us by a small percentage, where previously it was the 44,200. So it's approximately $30,000 difference because we only increased their income via having them more hours as opposed to increasing their charge out rate. You can do a combination of both, but you can just see the difference between the two. As you can see, where I've gone back to the previous example, so the extra clean out charge out rate generated 33,200, and we've now increased the gross profit to 33%, or 44,200, which is extra 30,000. So sure, you cannot price yourself out of the market. So if you're charging the cleaners out at $200 an hour, and all the other local cleaners were charging out at $50 an hour, then you may not get much business there. So you've got to be careful you don't price yourself out of the market, but at the same time you've got to make sure you cover your costs as well, because it's no use increasing the amount of cleaners or the amount of vacuum cleaners you sell if you're not making much off it. Otherwise you're doing a lot of work for very little return. So these are the ways to increase your gross profit. Is one, increase your retail sales price, or in this case over here with the cleaners, their charge out rate. If, for example, we could get a better deal on these vacuum cleaners and bought them in at 50,000, you'll find that that would also be a lot there too, in the savings would and increase the gross profit. So you could see the gross profit increase by about 10,000 there. On the service side of it, we can't quite do that. We can't say to the cleaners, well, instead of paying you $50 an hour, we're going to now pay you $30 an hour, because you probably wouldn't have many staff cleaners to do the work. And plus you've got the legalities of the minimum hourly rates as well, contract rates. So that's where you can actually have there's different ways you can increase your gross profit. And these are just showing you the impact of those changes to get your gross profit up.